Okay, got the recording going. Start sharing my screen. And it is 11 a.m. Pacific. All right, thanks for joining up, guys. We're going to do a TOS setup lesson today. Going to be quick, probably 30 minutes. First of all, this is what you want your kind of sidebar to look like over here. So this might look different when you first open TOS. You're probably on the monitor tab. So right now I'm on the chart tab. This sidebar menu, this is how I like to have mine set up. So you can see this little button right here. You can click to expand or close the menu if you don't see it right away. So if you want to get it out of the way, you can click this little button right here on the side. So usually I have a quick chart open with like SPX.
BA, Boeing.
Oops,
Boeing invests $5 million.
Got that turned off now. There we go. And then right here, I have my watch list. So we're going to go over kind of how to create a watch list and make a watch list for option contracts as well. Show you how to add them to a watch list right here. Here we have the live news. And then here is another gadget called Trade Flash. So big delta trade buy of 2,650 shares of Tesla for calls, right? For a total of that amount right there. So it shows you kind of more directional trades and options. So the way you add these gadgets, you come down here on the side, click the plus sign, add gadget. There we go. And there's all these different gadgets, right? You can add over here. So I have a quick chart, the watch list, live news, and the trade flashes right here. So also we watch CNBC through Thinkorswim. You can watch the CNBC channel. Sometimes we watch that. So that's the Trader TV button, right? So I already have that. So that's how I set up this sidebar menu and look at this information. So now we move on to, or actually what you want for your charting is to go to the top right, go to setup. If you're, just starting to use the application, you go to application settings. You might not have done this yet. You go to system and make sure under quote speed, you have it set to real time, no delay. Because when you first download the Thinkorswim platform, I think it comes on a 3-second delay by default. So you want to make sure real time, no delay is enabled. That's going to make your the speed of your quotes faster to real time. And that's what you want, because every second counts when we're trading, right? So quick trick there. So now I just have this one chart. I'm under the charts tab, right? So these are the different tabs. I really only use the trade tab and the charts tab. Okay, so I'll have different, grids or chart workstations set up underneath these two tabs. These are the ones that I mainly use. So I'm under the charts tab right now with one chart. This is SPY. If I want to add more than one chart, I go up here underneath on demand. You click this grid button. And then it pulls up, this button right here. You can select by highlighting however many squares you want. And so now I've highlighted 4 squares. So this gives me 4 charts, right? So I can make as many charts as I want. Like that. I'll go back to 4. Okay. So that's how you set up a grid. If it, kind of looks like this, when you first opened it, maybe it's got all these things going on. Maybe you don't want that. So the way you deselect it is this sidebar right here. So if you didn't know how to do that. So there's all these different options. This enables a buy sell button. This is time and sales, TNS, active trader. I don't really use the active trader like that. I use my phone to actually place orders. I find it a lot faster to use the TOS mobile app. I use the desktop app in front of me, my computer to actually chart, but I find that using the app is faster to execute orders. So, if I don't want all this, I can take off the level 2, I can take off the news, I can just have the chart, which is, either C or chart right here. So now let's start adding some indicators, right? I'm going to deselect it back to just one chart. Okay, so you go to studies. We're going to go to add studies, and this is where all the custom, built-in, indicators are based on, the availability of Thinkorswim. Some platforms have different indicators, but Thinkorswim has a lot, and also has custom scripts that you can download online through the Thinkorswim website, and also there's other premium scripts you can buy from different websites. So I've acquired a lot of custom scripts over the years, and that's why I personally like Thinkorswim, because they have so many of those custom scripts you can download. So I'll share some of those with you guys later. So let's add our first indicator. We're going to add, let's go to the letters V. We're looking for VWAP. And I'm only curious, I only want this middle band. That's the only thing I care about. So this upper band, we're going to right click, edit the study VWAP. And here you can see VWAP, upper band and lower band. We don't care about the upper lower band. So we're going to deselect all of these. Also on the lower band, hit apply. Yep, and that's what we want. So VWAP is the volume weighted average price. So that's all we want on the chart for is the middle line, right? So in order to save your workspace, we're going to add a couple more indicators, but to save a workspace, you would come down here and then save the grid as, right? So let's say, I had 4 charts here. Maybe I wanted to watch SPY in the top left. I wanted to watch NASDAQ. Then I wanted to watch ES and then QQQ, right? And then maybe I wanted to save this workspace. You can hit save grid as, and then you can type in whatever name you want here, and then you can save it. So that way, if you pull up, or log into Thinkorswim on a different computer, you can pull up, you just click on your grid, and that way you don't have to reset everything up again. So you can do that with the grid workspace. So you can set up and save, like that, or you can set up and save different sets of indicators, right? So let's add now some EMAs, right? So we already have EMAs on these charts down here, but we're going to add it to our SPY chart that we started working on. So I go back to one chart. How do we add the EMAs, the exponential moving averages? So you go to add studies, moving averages, moving average exponential. By default, it gives you the 9. And what that means is it calculates the average of the last 9 candles, right? So a lot of traders, day traders, use the 9 exponential moving average because it reacts fast to the price action. I'm going to make this orange because I like mine orange. I'm going to do this a few times, add study. And then it overlaps with the 9 again, so we got to edit it. So this is the new one. I use the 9, the 21. Make this a blue. Do it again. You're going to do this a few times. $55. So these are what most traders use, the 9, the 21, the 55, and they look for moving average crossovers on different time frames to alert either a buy or sell entry or exits, right? So most of the time we're watching the 9 EMA on the 5-minute, right? Today it couldn't break back above, so it just kept rejecting and trending lower. Right? We're in a pretty big sell-off today. You can see examples of where the trade during an uptrend might ride the 9 to the upside, and that's the ideal day trade to be in when the price action is above the 9 and you're long and you're writing calls, right? If you're trying to short, you want to see like today where the price action keeps rejecting that 9 on the 5 and pushing back lower. We couldn't break above the 21, rejected lower. So the EMAs kind of act as support and resistance, right? But in addition to support and resistance, what you want are price levels. So we have VWAP, EMAs. Now we're going to add price levels to our chart. And price levels are kind of like the homework you do beforehand, like on a stock. So you can see like we added these indicators to the chart and they, calculated and, have appeared With price levels, you set them yourself, so they're subjective. But I'll show you how to set up, how I set my price levels right now. So I'm going to zoom in here, and I always usually just use the weekly time frame. There we go. Oh, and another tip. So when you click, there's different tools, right? So here's the drawing tools button right here, or you could go to drawings and click drawing tools right here. So the ones that I use mainly, the pointer allows me to select and highlight what I want to, zoom in on, select that, and then you can right click to auto zoom back out. So the pointer allows you to click and highlight the time or the amount of candles that you want to zoom in on. And then the grabber, so it's called the pan. So it looks like a little hand. You can only pan left and right when you click it right away. You have to come over, like, see, I can't move it up and down just yet, but you have to come over to the right and zoom in or out a little bit, basically move that vertical time axis or price axis. And then now you can manipulate the chart up and down freely. So just a little tip if you want to manipulate your chart. So the price level tool is right below the pointer right here. And then, so what we're going to do basically to enable this, you just double click. So I'm going to do this where this bounced this candle right here. Double click and it sets this line, but it's not going to look like this for you guys right away. You want to right click. I think it's going to be a red line by default. So you right click on that price level, you edit properties. You want it to extend all the way across the screen. So left extension on, right extension on, and make it white, and then a dotted line right here, and then save as default. So hit save as default. Okay, and then it should look like mine right here. So the goal, what we're trying to do with marking price levels is look for multiple taps of the same level. So, market makers, the algorithms, they use these historic price levels, to set their, limit orders, or, you'll see large pools of orders at these, significant key levels, right? And it's usually whole numbers a lot of time, 400, 410, 420. So, big whole numbers like that will always have a lot of volume and always kind of be key levels. But there's also other key levels, based on historical price action. And that's what we're going to look for. Multiple taps of the same level, a lot of confluence, a lot of price action in that area, multiple taps. And it doesn't matter if it's, either the wick or the bottom or the top or the wick or the body. I'm just looking for multiple taps at the same level. So we kind of move up from this first level I marked. Here was kind of resistance, you can see. And then here it came down and tapped this wick. That wick almost came down and tapped it. But I'm looking over here as well. You can see the more current price action from more recently tapped along this level too. So multiple taps along that level. And it doesn't have to be to the cent. You guys realize there can be a little deviation, a standard deviation, and just treat it as a zone more than like to the cent kind of level. So if it's like, oh, it broke this level, or or it hit this level, just realize it could be like a 50 cent kind of deviation, so treat it as more of a zone. We move up a little higher, see a little action kind of right here, and we'll move a little higher, I think. I see bottom of this body, and then way over here, the bottom of this body formed and closed at that level. So multiple taps, that's 3 taps, a little bit higher. Yeah, I'm kind of liking that level better than down here. This could potentially, yeah, I mean, I might need to go down to the daily to see more price action and consider that a level, because here we have 2 taps. And actually, I'm just going to mark that level. Oops. Because that's 3 taps. I keep moving. There we go. So that level, there's 3 taps right there, and then actually 4 taps now that I'm seeing it. Yes, that's a significant level. And, so you might get a lot of these lines scrunched up, together, but once you zoom in, like once you're on the 5-minute time frame, I'm just going to minimize this sidebar. Once you zoom in, they're going to be more spread out, right? So we keep moving up. Here I see a level. So there was bottom of this body, top of this body, top of that wick, triple tap, kind of the bottom of this wick, move all the way over here, bottom of this wick, and bottom of this wick. So multiple taps there, moving higher. Okay, I'm looking left, I'm looking right with my eyes. Yeah, I can see a lot of taps along this line, like 4 right here, just top of that body, bottom of that wick, bottom of that wick, top of that body, bottom of this wick. Here, let me zoom in a little bit too, if you guys can see. I got a pretty big screen, pretty big monitor, so that's why I can see it, but I know you guys are on Zoom, so there. So we'll keep moving up higher. There's some area confluence kind of right here, a couple of candles. So I'm going to look over here and I can see 2 candles that form right there, also right there, and also right there, and then top of that wick too. So I'm going to mark level like right there. Yeah. So you want to look for the area with the most significance and the most taps, and that's usually your key level. So right here was resistance. There, bounced off of support. That body tapped it, that wick tapped it. So yeah, multiple taps right there. Move a little higher. There's a little area kind of right here. I'm going to use probably this candle because it's kind of like right in the middle. Oh, it doesn't match up the best. So, sometimes, the levels won't match up great. I'll probably just mark the bottom of this little zone too as another level, just so I'm aware. So here we have a gap. So gaps like to get filled. So you want to mark a gap zone like that. I remember playing this gap when it came back down. So gap levels get respected. So like this 450 to 403.50 range, I remember playing this during the intraday, and you can take, trades based around gap levels. Sometimes price will come up and reject it, kind of like it did on this candle. Came up and then couldn't close above that gap level. Let's keep moving up. Here's a double tap, triple tap actually. Boom, boom. And then all the way over here, boom. Here, bounce. There, tapped. There, it tapped. Tap, tap, 5 taps. Pretty good. Just crunch it up a little bit and move up. So we're setting these historic price levels because they show up when we're trading and will act as support or resistance a lot of times. And price action can, either reverse or break through and send, because, when we break a price level, sometimes we have a large breakout. So I'll move a little faster. There's a level. Might be a little off. I'm just going quick so you guys kind of get the idea. There's a resistance level. There's multiple taps right there. All right. So I'm going to go to another, and you can also, just like the different grids or, saving different sets of studies, you can save different drawing sets. So this is a fresh drawing set. I just made all these levels on. Here's one that I did for this week. So we'll go to the 5-minute and look at these ranges today. So you can see how price action kind of bounces in between these different price levels. So they can give you, potential extra. Oh, we are dropping further. But let's look at like this day, for example. So here we're kind of bouncing around. You can see the pre-market, is bouncing around those levels, pretty nicely, kind of, hitting the top. Little resistance, breaks out. Here you can see a test the first time pre-market, second time rejects, and then third time's the charm, breaks out, right? Here's a price level that it rejected, right? Once the EMAs are spread out. and then they consolidated, 9 curled under the 21, and then it pulled back, formed an inverse head and shoulders. You can see it kind of marked it here loosely, and then pushed up toward the end of the day before kind of pulling back again sideways. But you can see how these price levels that we just drew, present areas of support or resistance, right? So, if you're in calls, so let's say you get in at the bounce and hold of this price level, and then the 9 curls up above the 21, that's the bullish crossover of the EMAs, the 9 crossing above the 21, right? So the 9 curling under the 21 is a bearish signal. Price pushes up, comes back down, bounces off VWAP, right? So, and the 55 EMA, and then it reclaims the 9. Price action is above the 9 again, and then it finally breaks out that price level. So you get in, maybe on this candle, and then you sell when it hits that next price level up. So you can treat these price levels as price targets, for your exits. And then using the EMAs, the moving averages, you can tell when price is kind of getting exhausted. So here you can see the EMAs are all consolidated, right? They're pretty much all on top of each other. And then there's a nice breakout, right? And then we get to, about 9 o'clock. So we're past, the morning move, right? So you have to anticipate, volume's going to start drying up, right? Because there's the most volume in the morning and then at the end of the day, but usually during the middle, volume dries out, right? So you have to anticipate, resistance at this price level. You see the EMAs are really spread out, and then what happens? They curl back, come back down, right? So you can use price levels, EMAs, and VWAP all together. And then, so now if you want to save this as a grid set, right, or save all these indicators, you would save study set. So let's say VWAP, EMAs, and then the historical price levels. This is a part of the drawing set. So you would save that drawing set, maybe as weekly levels. You could go down to the 4 hour, and now you've got after hours data. You want to make sure you have after hours data enabled. So you go to chart settings with this wheel at the top in the blue bar next to the time frame, this little wheel. You go to options, show extended hours trading. You just want to make sure that's enabled on futures and all your other charts. So again, that's under futures, options, equities. Make sure you have show extended hours trading. That's going to be the highlighted, part of the day. Sometimes there'll be levels, during the pre-market or post-market hours that you want to mark. So like pre-market levels. Right. So this same day we were just looking at as a good example. So this was actually a weekly level that I had marked, but it, this would have been like the pre-market high, right? And this would have been the pre-market low down here. So usually I set these levels as additional price levels on my chart. So let's just say I set this, like I didn't have it on the chart and I just put it because it was a weekly, or a pre-market high. I mark it in blue. So that way I know it's not a week level, but a pre-market high or pre-market low level. So I have, so in the morning during my scan, if I'm looking to trade, SPY here, and I mark the pre-market range, the low and the high. So typically when a pre-market high is broken or a pre-market low is broken, price tends to send in that direction. There's usually a move in that direction. So, a couple of things happening here. Again, we mentioned the 9 curling up above the 21, price kind of coming back up and holding this price level as support. Price bounced off VWAP, and then also technical pattern, cup and handle. If you can see this kind of U shape that it makes using the pre-market data, that's why you want to have pre-market data enabled, so you can see, that kind of price action happening pre-market. And then it forms this little smaller U shape, and that's what the characteristic of a cup and handle is. And then you see that bullish move. A cup and handle is a bullish pattern, right? So it pushes up into that next price level, which we can treat as a resistance price target to sell our calls once we ride this breakout into. Another kind of tip using the EMAs is I call it the rubber band theory on the EMAs. So I haven't heard anyone really explain it like this, but this is the way I like to explain it. So the 9 EMA likes to be touching the candle, right? It's the one that follows the EMAs. The price candle, the closest, whereas like the 55, right, has more candles in its average, so it reacts slower to the price action. So that's why traders are using the 9 and the 21 mostly for those crossovers, for the entry or exit signals. But if you wait for the 9 to cross under the 21, as it does here, and you're in your calls, you've lost a lot of profit, by waiting until you get to this point for the 9 to cross under the 21. Because sometimes price might break under the 9 and then bounce off the 21 and then continue higher, right? You want to kind of sell into the rip because this is where you're going to conserve the most profit. So as you can see, this kind of parabolic move as it moves up and the 9 is no longer touching the price, right? See this kind of black space in between the 9 EMA and the price. Well, what happens is price action snaps back, kind of like a rubber band. So it snaps back to the 9, as you can see right here. And then this candle, you're no longer riding the 9, right? So here, price action is above the 9 the whole time. Then it comes back, and then this candle closes below, kind of cutting it in half. This should be kind of like your second sell point, and then your 9 under the 21 is like your line in the sand, right? Your first sell point is, anticipating that it's going to pull back because you see the EMAs are spread out and your candle is, gapped away from the 9 EMA. So the 9 EMA always wants to come back and touch the candle, or the price action always wants to come back and touch the 9 EMA. So anticipate that and, sell on this candle as you're ripping into this resistance price level, so you would conserve most of your profit on, either one of these two candles before it snaps back to the 9. So, anticipate that rip up away from the EMAs as, your first kind of sell point. Second sell point is where it snaps back and then cuts or closes below the 9, and it's no longer riding the 9 on the 5-minute, right? So it's starting a reverse trend. And then this is confirmation of the reversal of the sell-off. So that's how we use the EMAs, price levels, VWAP. Look for increase in volume, to confirm that a move is going to happen here. You can see that breakthrough of the price level had a huge increase in volume. So that would have let you know that this move is probably going to sustain. You can see that there's a lot more volume than there was in this push, which, that failed, right? Before it formed the cup and handle and then broke out. Okay. That was a mouthful. So right click auto zoom. Oh, another tip, how to get kind of this area. This is the expansion area. So you want to go to chart settings again. Where is it? Time axis. And mine set at like 100, usually 50 to 100. So let's say maybe 50. So, so that way it's not kind of like this. If your chart comes and it's all the way to the right of your chart, this gives you a little bit of kind of like playing room, so to draw, your potential ideas, which way you think, and the way you do that is using the other indicator, the trend line tool. So let's say, I'm trying to draw trend lines. Now I click the line tool down here. I can draw, right, trend lines, click. So like here, I was drawing the bottom trend line as we just kind of kept breaking down today, for example. So you can kept drawing your bear flags or bull flags. One thing I like to do is draw these trend lines like this when we have a red day, and you can just short as it breaks that, bottom support line. That could be the re-entry for your short. You can see it makes a higher low, but then price, rejects, whether it be the 9 EMA or the 21 EMA on the 5, and it goes lower. So you have multiple opportunities to re-short this thing today, as you can see. So what else? Oh yeah, watch list. We're going to go over how to make a watch list. Let's go to the side here. So you click on the name right here of the watch list. As you can see, I have mine named contracts, right? So we'll go to the option chain. I'll show you how to add contracts to your watch list. Let's create a new one. We'll call this just tech stocks. So real quick, let's add Oh yeah, here we go. Now we can add the symbols. So let's just do Apple, Microsoft, Google. So you can make, a watch list of all the stocks you like to watch. Save that. And here's a cool trick. You can actually link charts up. This is the other thing I forgot to go through when we were going through the grid section. So here you can see the watch list is linked to this yellow button. There's a cool feature to TOS. So now I've linked this window to yellow as well. So now I can quickly switch through the charts I want. And because these are linked, it'll pull it up in this window. Right. So let's say maybe I have the 4 windows open. So now, you can be watching all the other stocks you want to watch. And then up here, you can switch through your watch list. Oh, I have this linked as well. So quick way to cycle through a bunch of stocks and watch them all at once is linking a watch list like that. So now what you can do on top of this is I'm going to go back to my contracts watch list under personal. So here you can see I have actual option contracts in my watch list and not just stocks. So now I'm actually looking at the price of the contract as a graph of that option contract, the 410 calls, which got beaten up, or the 409 puts. Let's say you wanted to watch, call side and the put side. So that way you were ready to jump in whichever way, volume started pouring in. As you can see, puts, started picking up like an hour ago. So, you could have been watching at the money calls and puts to see like, oh, is it gonna finally bounce today? Or are we gonna break down more? Well, we ended up breaking down more. Right. So you could have hopped in the puts as you see the volume spike right here on this contract. Cool. So, you go to trade, by the way, to add them to the watch list. Go to trade. So this is like the option chain. Right. So we have SPY, all the different expirations. So these are 0 DTs that expire today. So you would right click on that option and you go send SPY 409 call to, not add to watch list. That was if you wanted to send it to one of your linked charts that you sent to a color. So you could send it to, like, if you had one of those charts in your grid, as blue, you could send this to the blue chart. You can send it to the green chart, vice versa, whatever. So add this to watch list though. So we're going to add this to our contracts watch list. And then now it shows up right here. So maybe I want to add the put side too. Add to contracts. Cool. So now I can just flip through all these different contracts that I'm watching to easily, get in, get out, right? Or know, which way I want to go, right? You could have, your calls up, your puts up, or maybe, you want to add option contracts that you saw had a lot of volume open interest. This is another tip when picking contracts, picking strikes. AMD is a good example of this because it's got strikes that go 101, 102, 103. So as you can see, I have volume and open interest under layout selected here. You can choose different sets of layouts, like here are the Greeks, right? There's the delta, gamma, theta, vega, but I'm interested in the volume and open interest. So AMD, like I said, was a good example of this little trick. It's kind of like a psychological trick on, how to choose your strikes. Choose the strikes that end in 5. Basically, that's the tip. That's the secret. Because those strikes are going to have higher volume and open interest. So let's look and see what I mean. Look at the 100 strike over here, the volume and interest versus like the 99 or the 101, right? So 13,000 volume versus 2,000 on either side, and 7,000 open interest versus 1,000 versus 2,000 on either side. So the 100 strike has more volume and open interest. Why do we want high volume and open interest? Because it's going to make that contract more liquid. You're going to be able to trade the contract easier, right? Buy and sell it faster. If the contract if the stock starts pulling back, then, you're going to want to sell, right? But if you can't get filled, you're going to have to, give up some of your profit, right? So you want to be able to sell, when you want to sell. So the more volume, the better chance you get of getting filled at the price you like, getting, conserving more profit, buying and selling faster, so just liquidity, for example, if you get stuck in a low volume contract, it might be hard to get filled at the price you want. So we want contracts also because we want to look where people are buying, where are people spending the money? What price do people think, where's the volume going? People like, maybe the 100 calls, maybe like the 105 calls because they think AMD can hit that by, next week. So you can see the 105 also has more volume and open interest than its surrounding contracts. So it's not to say that, the 101, 102, 103, won't make you money. Each of the options will regulate in order, meaning the 93 would be worth more than the more out of the monies, like the 94, 5, 6, 7. It's just, again, that goes back to liquidity and being able to sell and, buying contracts with higher volume and open interest kind of move better. So definitely want to use, or try to pick those strikes that, like, for example, 105, 110, 100, 95. So just look for higher volume and open interest, and that kind of give you an idea to where, what better strikes might be to choose, for example. So custom scripts. Oh yeah. So we added the VWAP. Let me go back to just one chart, and the EMAs. And we had price levels. Right. This is going to be a custom script I'm going to share with you guys. So go to user defined. This is where custom scripts are saved. So once you download custom scripts, these are all ones, all above them are ones that are, built into Thinkorswim, but the user defined folder is going to be where custom scripts are saved. So I'm going to go, I have a lot of them, like I said. So this one's just called the call put bubble script. I'm going to share it with you guys. Okay, it's in the Zoom chat. So you copy that link, and I'll post it with the video as well. So copy that link, go to setup in the top right corner, open shared item, and then you paste that link in there, you hit preview, and then import. And that's how you import custom scripts with the link. So again, you would go to add studies, user defined, and then that's where that custom script would be saved. So as you can see, it puts these little call and put bubbles where it recommends to buy and sell. So it's literally as easy as, buy here when it says calls, sell your calls when a put bubble comes through, get into puts when a put bubble comes through, and then sell a put when the call bubble comes through. Now on the 1 minute and sometimes the 5 minute, it will erase its recommendation bubble if price action does reverse and start, going back down the other way, for example. Like, it's just using basic momentum to try and recommend a call or a put. So it's not 100%, but you again use it with these price levels, your EMAs, VWAP, volume, all together, and it becomes a better indicator, right? So here, this call, probably is not working out, or it did for, just a couple of minutes, but it can quickly get reversed on, right? So there's the higher time frame you go, the stronger the indicator is going to be. So like on the 1 hour, if you can catch a put, like, or a call on the 1 hour bounce, right? But, for the objective of scalping, it can give you like some good kind of snipe entries. So like on this day, for example, playing the morning bounce, would have been a beautiful call right up, and then also a beautiful short from the top. It's just when it gets into this choppy range that it can become, kind of false signals, or it might not work out as well. So you always want to just, if you're going to try and use the indicator, use it in conjunction again with other indicators, like your moving averages and your price levels. but use it when there's the most volume, right? So cool. I think I'm going to end with that. Hopefully you guys learned a lot from that lesson. If you're new, I haven't used Thinkorswim before. If you have any questions, you can DM me, of course. And yeah, it was about a 40-minute lesson. Nice. All right, guys. Have a good day. And I think I'm going to end it here.